What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Friday. Hope you had a good week. We're going to wrap it up today. Just going over some breaking news with maybe BYN Mellon is going to be getting the first exemption to the SAB 121. We're going to cover BlackRock's post that they put out, a report that they put out on Bitcoin, and also the post that I put out today on Forbes. So that's what we have lined up for today. Let's jump right into it. Share the screen. Of course, we start at bitcoinandmarkets.com. Also, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. Appreciate if you're watching on Twitter, jump over there to YouTube and Rumble. Helps me, and subscribe. It helps me grow the show. I don't know why this is not getting any bigger. Stand by. There's something I'm not doing correctly. This is not showing completely. Let me stop sharing for a second. Jump back into the sharing and see if I can make it better. There we go. That's a little bit bigger. All right, bitcoinandmarkets.com. That's where I put out all my stuff today. I put out a premium post over there. Tons and tons of stuff in this one. You can see, I'm not signed in there, but there are at least a dozen charts. I also jump into fundamentals as well. Usually I leave the fundamentals for the free Monday newsletter and do just the technicals on the premium stuff. But with the new stuff that came out today, I wanted to cover that and show some inside stuff from there. So cover the technicals, cover the fundamentals, and then I give a near term and I bring back the medium term forecast. I kind of stopped doing that for a couple of weeks because this has been the worst post halving performance for Bitcoin. We were dipping a couple of weeks ago. I'm like, we have to reassess if this 4-year cycle is still real. And so I wasn't comfortable at the time saying, hey, this is my medium-term forecast because everything was kind of going up in the air. So now bringing that back, starting to flesh out, re-examine both the medium and long-term. Hope to bring the long-term forecast back very soon. But you can, if you subscribe over there to the professional tier on the website, you can go back just a few issues and see the long-term forecast. So, okay, that's that. Let's jump into my post for today on Forbes. And it is the truth about Bitcoin, busting the big myths. This is a good post to send to those people in your family that might be Bitcoin skeptics, maybe your parents, maybe your brother, sister, cousins, whatever, that are in your life that they're normies when it comes to Bitcoin because they probably have a lot of the same criticisms. And so what I try to do in this post is I go through some of these major myths about Bitcoin and break them down. So let's go into this. First myth is about Bitcoin being just for criminals. Bitcoin is not only for criminals. Let me zoom in here. I know there's going to be ads on this. Forbes, you have to allow ads, but let's see if I'll do my best to not let them get in our way. Let me try to zoom in another time. That ad on the right is just not going away. Okay. So one of the most pervasive myths about Bitcoin is that it is primarily a tool for criminals. The misperception likely stems from the fact that Bitcoin is censorship resistant, meaning its code cannot discriminate between transactions. So the actual code itself, there's no way to make it not confirm a transaction, even if you're from like a sanctioned entity. Now, there are miners that might agree with that and not confirm your transaction. There will be other wallet providers that might do that. But the code itself, if you want to use run a raw Bitcoin node and transact in that way, the code will not discriminate against anybody. So that's why I think this misconception continues. While this can make it attractive for some illicit activities, the facts don't support the idea of rampant criminal use. It's quite the opposite. The latest Coin Analysis 2024 report, or Chainalysis, shows a decline in crypto assets received by illicit addresses from 39.2 billion in 2022 to 24.4 billion in 2023. That total represents just 0.34% of total crypto transaction volume, down from 0.42% the previous year. And yes, I do use the term crypto. Unfortunately, I am doing that with Forbes. We Chainalysis does break down some of the stuff for Bitcoin versus other scams, but their free stuff doesn't, and so they just give that. Okay, and here is an image of that. So let me try to get that all full screen here. So illicit share of all cryptocurrency transaction volume. You see the last year, 0.34, 2022, 0.42, but under 1%. That's 1/3 of 1% um, for the last year, 2023. So 1/3 of 1% of all Bitcoin volume basically is going to illicit activity, which is way higher in the dollar. I have some statistics for that. Don't remember actually if I put them in here, but let's keep going. Chainalysis also estimated Bitcoin's specific share of total illicit cryptocurrency flow at less than 25%. And I did not put a chart in here of that, but they break it down out of all the illicit activity, what comes from what. Stable coins was the majority now. Bitcoin was less than 25%, but did not get a specific number. So that's the type of information you have to pay for. Another report from Galaxy Research showed the Bitcoin network transferred 1.4 trillion in value in 2023. And it was actually 6 or something trillion, but a lot of that is change. So they try to go through and take out how much change was sent on each transaction, and they are left with 1.4. Of course, this is not exact. It could, there's a margin of error here. I would say probably 1.3 to 1.5, we could say, is a good margin of error for this. But using these figures, we can estimate that only 0.43% of Bitcoin's volume came from illicit activities. If we add this 25 from Chainalysis and a 1.4 trillion from Bitcoin, we can come up to this amount. Okay. In comparison, fiat currencies dominate illicit financing. A 2023 report from NASDAQ, they estimated the global illicit fund flows at a staggering 3.1 trillion. Estimated global illicit fund flows at, oh man, that's a typo. Oh my gosh, I got to go in and fix that. How did that happen? Bitcoin's contribution to this total, just 0.2%. So out of the 3 trillion, instead of going by the 1.4 trillion, now if we go by the 3 trillion, Bitcoin shrinks to 0.2% of the total. So 98.8% of illicit fund flows is basically from fiat currencies. This is remarkable that Bitcoin recently surpassed, and this is remarkable given that Bitcoin recently surpassed the Japanese yen to become the third largest currency in circulating supply. All right. So regarding black markets and the dark web, Bitcoin's impact is similarly minimal. The size of the global black market is estimated at 2.25 to 2.5 trillion. If all of Bitcoin's illicit use was in the black markets, which it's not, some of it's from sanctioned entities or something like that, it would still only account for 0.27% of the global black market activity. So Bitcoin's, they're all up in arms talking about Bitcoin being used by criminals, when really 98.8% of criminals use fiat currencies. Okay. Continuing down, Bitcoin is often criticized. This is the second myth that I'm debunking: how to evaluate Bitcoin's real value. I changed all these titles because I had like the name of the myth, and the editor said don't put the myth name repeatedly because people start believing it. Bitcoin is often criticized because it lacks so-called intrinsic value, unlike gold, fiat currencies, or labor. Critics argue that Bitcoin, being digital and intangible, doesn't hold intrinsic value because it isn't backed by a physical commodity or government and has no practical use outside of transactions. The concept of intrinsic value refers to an object's value inherently or for its own sake. In reality, Bitcoin lacks intrinsic value because intrinsic value is a fallacy. All value is subjective and determined by the market. Consider the example of water. While it's essential for life and in high demand, the price one is willing to pay depends on the circumstances. A thirsty person in the desert will value it much more than someone already hydrated in a rainy region. So there you go. The lack of intrinsic value has been understood for a very long time. In Gary North's 1969 essay, The Fallacy of Intrinsic Value, he clearly states value is not a metaphysically existing substance. An object is simply valued by someone who actively values it. This quote emphasizes the subjective nature of value, which is central to understanding Bitcoin's role in today's economy. Intrinsic value is sometimes stretched to include use value, as in gold's case. For example, even if gold were not used as money, it still has use in jewelry or dentistry. Now, jewelry, not so much. I think the use of gold in jewelry is pretty much the same as the use in money because it's just valuable. But dentistry, yeah, there are like actual chemical reasons for using gold in dentistry. Proponents of intrinsic value claim that these industrial uses give gold an inherent worth beyond being a medium of exchange, which Bitcoin lacks. However, this argument misses the bigger point. All utility comes from fundamental properties. Even its utility as jewelry, its utility in dentistry, its utility as money, all that stems from fundamental properties. Okay, gold's other uses don't make it a good money. Its underlying properties make it a good money. Man, that's a bad sentence. Sorry, guys. Similarly, Bitcoin has real finite properties that create value. It's the only asset with a truly fixed supply. It's censorship resistant, and it can be sent over a communications channel. While Bitcoin may not have the physical nature of gold or the government backing of fiat currencies, its value is derived from unique properties that create reliable demand from its users, just like every other asset. Okay, Bitcoin's environmental impact. That's the third myth here. Another common criticism of Bitcoin is its environmental impact, particularly due to the energy intensive process of mining. This criticism has faded somewhat over the past year, but it is still front and center for many. While true that Bitcoin mining consumes immense amounts of electricity, it is a 0% zero emission activity. Sorry, it is a 100% zero emission activity. Like electric vehicles branded as zero emission, Bitcoin mining equipment itself produces no emissions either. Second, thanks, Joachim. He said, my copy editing offer stands. Yeah, I had an editor actually look at this from Forbes, and for some reason they didn't catch that bad sentence up there. Okay. Second, and I didn't either. I reread it like 3 or 4 times. Second, Bitcoin's energy consumption is inherently valuable as attested by the market. You know, if it wasn't valuable, no one would do it. So because people do it means it's valuable. Bitcoin's miners bid directly for the same power as everyone else. If they could not pay for the electricity with profit, hash rate and power consumption would fall. This point becomes more clear if we use another industry as an example. AI and data centers use an exponentially increasing amount of electricity. However, most people understand why that would be because it's useful. But they don't understand why you need it for Bitcoin. Well, because it's useful. In 2022, data centers and AI consumed more energy than Bitcoin mining. And by 2027, it is expected to double Bitcoin's energy consumption. But it's useful. So, quote unquote, useful. People see it as useful. So it's not questioned. But Bitcoin is objectively useful because the market is doing it. Okay, a growing percentage of energy for Bitcoin mining also comes from renewable sources. Bitcoin ESG expert Daniel Batten has said in public statements it is the #1 industry for use of renewable energy, with up to 56% of mining powered by renewable sources. Bitcoin miners also do something no other industry can do. They harness waste methane, abating 70 tons of CO2 per year from entering the atmosphere in a market-driven process. And that's really important. It's a market-driven process. So No other industry can go out to these wells and actually use the energy, because for other industries to use the energy, they would have to create the energy and then send it on transmission lines, or capture the methane, send it somewhere else to be used and burned for energy, and then turn into something else. Well, Bitcoin can go right there to that well site, put a container down, put a generator there, put a mining equipment right there, and just mine Bitcoin right on site. Very low infrastructure costs, and that's what they're doing. They're capturing a ton of methane, and in the future, we'll probably see a majority of these sites having Bitcoin miners attached to them. Moreover, Bitcoin can directly subsidize renewable energy projects. These projects often face long pre-commercial periods before connecting to the grid. A study from Cornell, and I linked to that here. Okay, how come that did not take? I know I put the year in here and it did not take. So let me refresh this. Sorry, guys. There might be a newer version. Oh, man. That's what you get. Come on. Get rid of this advertisement. Oh, man. That's why I hate ads on websites. But where were we? Can you stop it? Get out of here. The heck is going on? They're wrecking my whole flow here. How do I exit out of this? Jesus. Okay. Where were we? Down here. No, that change did not take. So, anyways, a study from Cornell researchers found that Bitcoin mining can help offset costs during this phase. So, during the initial pre-commercial period, so they are putting up a wind farm or a solar farm, and they have it, 50% complete, but they're not going to connect it to the grid until the end or whatever. So they have this longer pre-commercial period that they can actually be mining Bitcoin on site and earn, earning a little bit of their investment back. So the study showed that Bitcoin mining could generate $47 million from planned renewable projects in Texas alone, offering crucial financial support during this vulnerable stage. Understanding Bitcoin requires blah, blah, blah. Okay, so that is the post. Sorry for those hiccups there. I'll go back right after this live stream and fix that up. But where are we going next? Let's see. We are going to this PowerPoint or PDF, but let me check the comments. And that wasn't big. There we go. All right. Yes, we are live. If you guys are watching on YouTube, if you're watching on Twitter, jump over to YouTube and Rumble, make a comment. Ask me any questions you have about Bitcoin or anything. And we'll jump into that as well. Let me check Telegram and see. All right, Rand. Yeah, check it later. I'll post this in Telegram as well. A Parker says, I need to read out loud to myself. Yeah, man. I do a lot. I put it on the page, then I I read it. I'm telling you guys my process. I write it, I edit it myself, pop it into ChatGPT, say, hey, check my grammar and my flow of this piece. It gives me suggestions. Then I turn it into the editor. The editor gives me their suggestions, and then as I'm fixing whatever they told me to fix, I'm rereading it for probably a fifth or sixth time. And so yeah, I don't know how. Sometimes your eyes just miss that. It's been better lately though. If you guys remember on my Monday post, man, there used to be so many typos. But just running it through ChatGPT before I publish it, that catches 90% of things, and this time just something slipped through the cracks. But okay, let's see here we go. This is BlackRock's Bitcoin report that they just put out. So let's go through this a little bit. It's pretty awesome. They're key points. The big ones that I wanted to point out was number 2 here and number 4. So Bitcoin, with its high volatility, is obviously a risky asset on a standalone basis. However, most of the risk and potential return drivers Bitcoin faces are fundamentally different from traditional quote unquote risky assets, making it unfitting for most traditional financial frameworks, including a risk on or risk off framework. So what does that mean? That means that, it's not a risk asset like the S&P 500. Many people try to criticize Bitcoin, say it's just NASDAQ with, 3x returns. And it's not, okay? Fundamentally, from a fundamental perspective, it is not risk on or risk off. It is an exit door. It is getting out of the system. It's putting a little capital, better than cash. Okay. It's better than a cash position in your portfolio. It's putting it outside of the system. And it has a massive addressable market, a massive potential for growth. And it's outside of the system. So they're thinking of it like this. BlackRock is telling their clients this. Okay. This is a major, major deal. And number 4 here, over the long term, Bitcoin adoption trajectory is likely to be driven by the intensity of concerns over global monetary stability, geopolitical stability, and U.S. fiscal stability and U.S. political stability. So all of this stuff right here, global, geopolitical, U.S. fiscal and political stability. These things are what I have been saying. This point really sounds a lot like my stuff over the last few years, how Bitcoin is going to get adopted. It's a hedge against deglobalization and a changing of the fundamental system that we have today. Okay, so if we're having bad monetary stability, bad geopolitical stability, fiscal and political, U.S. political stability, we're changing to a whole new paradigm, and that's what Bitcoin allows. Bitcoin allows us to change to a whole new paradigm, and this is what BlackRock is actually saying. They sound a lot like Bitcoiners. Some of this stuff sounds like me. Some of this stuff sounds like other Bitcoiners. So what was some other stuff they put in here? Why Bitcoin matters. First, it's important to ground ourselves in the fundamentals of what, let me zoom in here a little bit, of what gives Bitcoin its relevance. So Bitcoin hard-coded supply cap of 21 million. That's their number one thing of why Bitcoin matters. Let that sink in. They're Bitcoiners now. BlackRock, the largest asset manager in the world, is a Bitcoiner. Its global digitally native nature means it can be transported anywhere in the world at near real time, at near zero cost, transcending the frictions long inherent in moving value across political borders. That's a little bit antisocial, or whatever the term would be. They're talking about moving it effortlessly across political borders. Its decentralized, permissionless nature made it the world's first truly open source monetary system. I mean, don't they sound like Bitcoiners? So what makes it relevant? Some more here. Persistent historical challenges around money. Money is prone to inflation and debasement. Is anybody else saying that kind of stuff? Yeah, Bitcoiners are saying it. Well, gold bugs are saying it too, but they are Bitcoiners. Instead, Bitcoin has a fixed maximum supply of 21 million. Traditional monetary system is difficult to transact across borders. There's lots of hurdles you have to do. But that's, Bitcoin is digitally native and borderless. Borderless. They're using the term borderless. That's a Bitcoin term. And number 3, access limited to anyone's particular country, controlled by central authority. First, truly open access global monetary system. So yeah, they're selling it, man. They're actually using Bitcoin terminology and Bitcoin rationale to sell it to their boomer clients, which is kind of amazing to think they believe there's a market for this. They believe there's a market. Larry Fink was out there on CNBC or whatever just a couple days ago as well, probably the day that this dropped, and talking about how it is going to be the new system and all that. They think there's a market. And the price is only what, 63,000 right now? I mean, golly, it's going to go way higher. So then they talk about some of the history of Bitcoin here to where it got to today. You can see the cycles. I mean, this is straight out of some Bitcoin newsletter. Oh, it's going to BlackRock clients. Pretty amazing. Uncorrelated asset. This is one of the things I have been harping on. Okay. It's uncorrelated to, you can see the S&P 500 correlation just up and down, up and down. Gold, it's, I mean, gold is uncorrelated as well, but they're kind of trying to point to how, well, look at this. This is interesting. So gold correlation is 0.1 to the S&P 500, which is completely uncorrelated or very, very uncorrelated. And Bitcoin is 0.2. So it's higher than gold, but not all that correlated. So it's kind of like a gold, like this would tell me it's a tech play on gold. Kind of a mid step. I mean, it's perfectly situated. Perfectly situated. All right. Moving on here. Bitcoin as the first decentralized non-sovereign monetary alternative. They use the word non-sovereign in here, guys. They're selling this to people. They think there's a market for the term non-sovereign right now. Going into recession at the end of a 75-year credit bubble. The largest asset manager in the world is saying these things. I think it's incredible. To gain widespread global adoption has no traditional counterparty risk. This is one thing I talk about a lot, counterparty risk, because at the end of a credit bubble, everything is counterparty risk. Bitcoin does not have counterparty risk. That's why it is the alternative. It depends on no centralized system or trusted third party and is not driven by any one country's fortunes. These properties make it an asset that is largely detached on fundamentals from certain critical macro risk factors, including banking system crises, sovereign debt crises, currency debasement, geopolitical disruption, and other country specific political and economic risks. Holy cow, flight to safety. Because of these attributes, Bitcoin has become seen by some investors as a flight to safety, and much, much more, many more in the future, in times of fear amid some of the most disruptive global events over the last 5 years. So now this chart is pretty amazing, and I want to bring this up completely here. This reminds me of a post that I did last year. I believe, was it last year? Yeah, it was after the October 7th stuff. So it was just about a year ago, about 11 months ago. And it was Bob Elliott and Michael Green, and they got on some podcasts and they were all ha-haing and laughing it up, getting a big giggle, saying, Bitcoin is not a geopolitical hedge. Look how it performed during the October 7th. And they were pointing at gold, they're pointing at other things. I tore them to shreds in my post. They wouldn't engage. They would not engage. I even sent Michael Green a link to an actual study that was, went into detail on the history of Bitcoin and geopolitical events and showed that Bitcoin was positively correlated with geopolitical risk. So that's actually been studied, but it's exactly the opposite of what he was saying. And I recently tweeted it out. So if you go to my Twitter, you can find it a couple days ago. But here, BlackRock is finding the exact same thing. So this first group of boxes, is my cursor not coming up? Okay, these first group of boxes is, oh crap. All right, first group of boxes, a 10-day return. Second group is the 60-day return. Then they have all of these events over the last 6 years, actually going back to 2020 here. So US-Iran escalation, the 10-day return, Bitcoin came in at 12% above the other two. stocks or gold, and the 60-day return as well, 20% versus stocks and gold. COVID outbreak in March, Bitcoin was down on a 10-day return. However, look at the 60-day return. Even during the COVID crash, Bitcoin was 21% up after 60 days compared to S&P 500 and gold. US election challenges, November, Bitcoin is up. 60 days, Bitcoin is up. The other two are not. I guess S&P 500 was up after 60 days. Russia invasion of Ukraine. We all probably remember this well. Bitcoin was down initially, 6% in the first 10 days. But after 60 days, look, 15%. That is pretty significant. I don't know why my cursor keeps blinking in and out, but 15%, that's pretty significant. U.S. regional banking crisis, March of 2023. Again, we all remember Signature Bank and what was the other one? First Republic, I think, or One Republic, First Republic. Bitcoin was up 25% after 10 days and 32% after 60 days. And the yen carry trade unwinding that we just lived through on August 5th. You can see Bitcoin was flat. S&P 500 was up by 2% after 10 days. So that's that. And we're going to see Bitcoin up majorly, probably, hopefully 50% after 60-day return there. So that is crazy. That's absolutely crazy. If you look at this, just the 60-day return section, look at all the green on Bitcoin. Nothing else is even close to performing as well. So that is, in my mind, that's very, very cool that they're putting this out. All right, let me get out of this. All right, and go back to this. What's up, guys? Then they go into some debt dynamics. You can see the U.S. debt here, deficits here, deficits getting less, which is interesting. You guys can you? Why can't you see my cursor? Deficits actually going lower. So this would be deficits getting smaller in their projections while the debt continues to get really bad. Okay. Bitcoin is still a risky asset. It's just not necessarily a risk on asset. And that's it. So that's their post there. Pretty good one. Let me check the comments here. Dex Invictus back with this. What's up? John Delaney, what's up? Hey, if you guys are watching, 178 people watching. So if you are over on Twitter, jump over to the YouTube or the Rumble and make comments there. Like, comment, subscribe. Appreciate that. Helps the channel grow. And check out the Telegram, t.me/Bitcoin and markets. That's the community. People hang out over there. Chat it up. Let's see if there's any other comments. Joachim. Oh, man. We're still on my typos. Grammarly is better than ChatGPT. Okay, yeah, I probably agree with that. The editor actually told me to use Grammarly too. I think it's just funny that we're still on my typos. Okay, typos suck. I'm not good at catching my own typos. I'm sure you would be an asset, man. I cannot pay you. I cannot pay you for that service, though. All right, let's jump over to the next topic, and then we'll get out of here for the weekend. So let's share this screen. This is from Unchained. They just dropped this. Let's see if we have a date on this post. Today at 7:45 a.m. Okay, so that's not, I thought it was like seriously 2 hours ago. But let's get in. The title is BNY Mellon identified as the first bank to receive SEC exemption from SAB 121. If you're new, which you probably are not watching this, SAB 121 is a rule, a guideline from the SEC that came out. I think originally it came out in 2021, or maybe 2022, but it's come back to the forefront last year with a fight in Congress, or was it this year? I don't know, recently, a fight in Congress in a bill trying to overturn it. Both houses voted to overturn SAB 121. However, Biden did not. Biden vetoed it. So, uh, of course, that was also at the time when the Biden administration was doing a complete flip flop on Ethereum for the Ethereum ETF. Um, so lots of back and forth here. Not quite sure where they would end up on this because if both houses are passing this, let's say Kamala Harris wins. I mean, most likely there's going to be a major Bitcoin crackdown from the government, but if the House and the Senate actually flip over to both being ruled by the Republicans, maybe there's hope that they wouldn't crack down as much. But being that they can do so much damage as an executive branch, um, SAB 121 will definitely stand. But as of right now, short of passing that bill, what they're doing here is they're kind of letting onesie twosies picking winners and losers, onesie twosies to be exempt from this SAB 121. And that what the rule is here is that they don't have the ability to custody customer Bitcoin. So like they custody your dollars, right? You hold your dollars in your account at the bank, but they can't do the same for Bitcoin. So that is the big thing. They pretty much cannot touch Bitcoin. But let's read into this a little bit by Jason Brett from Unchained. In what would be a huge breakthrough for banks looking to dive into institutional crypto custody business, BNY, America's largest custodian bank, was identified during public testimony in Wyoming's Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology as having received a variance from following the SEC's SAB 121 accounting guidelines for its institutional crypto custody business. Okay, that is a lot of terminology in there. Basically, they are having some meeting in a Wyoming government committee, and the news came that they have an exception to SAB 121, and it's coming. This would be huge, very, very big, and probably not the only one. They are the largest custodian bank, so they probably will get this exemption first, probably followed by others, but trickling it in. Of course, if Trump wins, this could happen overnight. This would be overturned. And yeah, so let's continue reading. As part of a broader federal update on Monday, Chris Land, general counsel for U.S. Senator Cynthia Lummis, testified that the SEC and thus likely other regulators have cleared the way for BNY to provide institutional custody for digital assets. BNY is looking to get more involved in the crypto custody business, Land testified. They have some problems with Staff Accounting Bulletin SAB 121. And the SEC has apparently given them some kind of variance from SAB 121 to move forward. Exemption. Land provided this update in the context of the potential impact on Wyoming's special purpose depository insurance. Okay, lots and lots of verbiage. The SEC reveals SAB 121 exceptions for cryptocurrency. Last Monday, SEC Chief Accountant Paul Munter gave a speech in which he surprisingly revealed that the agency had granted some exceptions to SAB 121. So, some exceptions. They have picked the winners. Those are the winners. And everyone else is a loser in this. That is not the way the government is supposed to work, obviously, not the way the SEC is supposed to work. But let's continue. Mostly finding that the rule did not apply to certain entities if they meet certain conditions. Munter said one exception had been granted to a bank, several brokerage houses, and other entities that use blockchains to track and transfer traditional financial assets without specifying the names of any of them. SAB 121 requires that entities who choose to custody crypto list the assets on their balance sheet and create a corresponding liability equal to the worth of the crypto. Okay. Well, if they hold something for somebody, that is a liability of the bank and it's an asset for the customer. So, yeah, there would be a liability on their balance sheet. I don't think they need to necessarily create it, they just need to maintain their balance sheet correctly. Okay. Though it is technically guidance, the General Accounting Office determined that it was a rule. The crypto, and so this is above and beyond their mandate, right? The crypto and banking industries have strongly criticized this measure as overly burdensome to comply with. In his speech, Munter outlined situations in which the SEC found SAB 121 did not apply for a bank, brokerage house, or other entities that use blockchains. I hate this term. It's not blockchain. It's a decentralized network, man. In the case of the bank, he said the conditions involved the institution working with a state regulator first to ensure that the crypto assets, Bitcoin, being custodied would return to the customer in the event of a bankruptcy, and that activity with customers would only comprise institutional custody with sufficient controls in place to manage risk. Okay. So that's enough of that. Let me check comments. And then we'll look at the price, guys. Look at the price before the weekend. All right, 200 people watching. If you're watching on Twitter, what is up, guys? Jump over to the YouTube and Rumble. The links to that are in my pinned tweet. Go over there, like, comment, subscribe. Put your comments down below. Call me out if I'm making silly comments. If I'm making, have the wrong macro thesis, you guys can call me out on that. Or if you have questions or general comments, put them down below. All right, let's jump into the price. Need to pull this up. We are kind of talking about this before we went live on our pregame show over there on Telegram. So this is SP 500, but let's go to Bitcoin. 62,700 currently. Some interesting moves here. So if we put the moving averages up, you can see price is really running into that 200-day moving average. When I posted this in Telegram earlier today, Point had a good comment. He's like, yeah, I hope that it kind of cools off here, because back here it broke through pretty easily. As it, this 50-day, let me zoom in here a little bit. We're talking about this section right in here. Well, we can even go back all the way to here. So you can see the 50-day was holding it down. Then when we broke that 50-day, it broke it with some pretty good momentum. Broke all the way above the 200-day, hung out there, but didn't have any follow through, and then collapsed back down. So he was saying he hopes it doesn't do that again at the 200-day, kind of consolidate here. Let me get a marker out. Consolidate in here. I think over the weekend we'll probably consolidate, maybe go down a little bit, and then come up to new highs. So that would be pretty good. Of course, I put out my premium newsletter this afternoon with my medium and short-term forecast for Bitcoin. So everything looks pretty good. The fundamentals are very strong. We just read through the BlackRock thing, just talked about BNY Mellon getting the go ahead to start custodying Bitcoin. We did not talk about the MicroStrategy buying. I think they've out of the $1 billion raise. So it was 800 million. Now it went up to $1 billion, I think. And they started buying it already. And I think they bought 7,000 Bitcoins or something already for this next $1 billion purchase that they have. So yeah, everything is very, very positive for Bitcoin right now. We held the bottoms. We have major support underneath us. I mean, if the price did drop, we're talking, we have this support right here. We have the 50-day moving average. We have, oh, come on, man. We got the 50-day moving average. What other support do we have? We have this kind of block. Now, if I turn this into kind of the 58K gang block, this whole thing is a ton of volume right here, this whole box. And so this is going to take a lot to get down through again. Okay. There's no way that's going to happen with these fundamentals the way they are. I mean, I guess I would have said the same thing back here. But it just feels like, we are coming from oversold. We are not overbought yet. If we bring up the S&P or the RSI and stuff, we're not overbought yet. We still have plenty of room to rally before we consolidate or correct a little bit more. And then it's off to the races. So we will see where we go from there. Let's take a look at a few other things. I'm going to put the comments up, though, so I can see if anybody's making comments. Telegram, I had to minimize that because we went over this anyway earlier. Lots of action on the Ethereum side of the house, guys. They are trying to get this meme started with ETH is money. Okay, first off, ETH was ultrasound money. No, actually, let's rewind. What's the first one I can remember? Like, Ethereum is a world computer. Then code is law. They break all these, by the way. Each one of these things are invalidated in practice because they're just marketing memes. What's the next one? I guess you would have programmable money, maybe, or smart contracts was a big one. Of course, smart contracts that was a made up term as well. I mean, it wasn't made up, but it was just a marketed term. It was false marketing around that term. So that didn't last. And then we had ultrasound money. That didn't catch on because they've been diving. I mean, if you just zoom out, it's just been going straight down for a long time. Now this new meme that they're trying to do is ETH is money, trying to make it very, very simple. Okay. Bitcoin has a simple marketing tagline that you can bring to the boomers, and that would be Bitcoin is digital gold. It's a fixed supply. It's decentralized. It's borderless. All those things BlackRock was using, all those taglines, safe haven, all that, right? Bitcoin is very simple. But when you try to explain Ethereum to these people, like you say, world computer, well, that doesn't make any sense. Code is law. That doesn't make any sense. So all these things don't make sense to the boomer. So what is Ethereum trying to do now? They're trying to do ETH is money. Very, very simple. But I saw a funny thing with an OG, some Eastern European name that I cannot pronounce, but he's a long, long time Bitcoin dev, probably from the beginning. And he came out and said, Ethereum is not money. It has never been money. We've never marketed it as money. We've never called it money. It was oil back in the day. That's why they called it gas. That's why they call their fees gas and not fees, because it's supposed to be like oil. And of course, they threw that out of the water when they started being ultrasound money in an attempt to continue to latch on to Bitcoin's narrative. But yeah, so he came out and he poured cold water on that ETH is money thing. So there's a lot of infighting going on with Ethereum. It is bouncing here, as you can see. This is Ethereum versus Bitcoin. So it is bouncing back above 0.04. Okay, maybe it can recover for a while. I don't know. It went so far for so long, so far down for so long. Maybe there's some gas in it to have a little bit of a correction and then continue down. But the long time, if we go to the monthly or weekly chart, okay, let's just take all this off and take these moving averages off. So if we just zoom out enough, I mean, Ethereum, it might recover a little bit, but its long-term trajectory is down, down, down against Bitcoin. It trades on Bitcoin fundamentals. I mean, if we go back to that period with the German government dumping all the Bitcoin, Ethereum dumped more than Bitcoin during that time. Why would that be? They weren't dumping Ethereum, but they're dumping a huge, significant portion of Bitcoin, 50,000 Bitcoins, because Ethereum trades on Bitcoin fundamentals. It does not have its own fundamental. I mean, it does have its own fundamentals, but it's not traded on because nobody gives a crap about it. They see Ethereum as an alternative to Bitcoin. The bots are programmed to trade the spread, uh, and that's just how it is. Nobody really cares about Ethereum's goals or aims. It's a dead coin from a, I guess, movement perspective, like the decentralized movement or blockchain movement. It's dead from that perspective. All Ethereum is now is like a penny play on Bitcoin. Okay, that's all it is. All right. Happy Friday to you, BTCP. And happy Friday to all you guys out there. Let me check Telegram one more time, see if there's any more comments. Oh, man. Okay, so that is Ethereum. Let's check a couple more of these. Dollar. I mean, I am surprised at dollar weakness. We went over why this is surprising to me on the pregame show. It's just, I don't expect at this point in the recession or pre-recession for the dollar to be doing this yet. So that's a little bit surprising to me. Gold, big new all-time high, 2620 today. Bitcoin will follow this. I mean, I would be slightly concerned if I was a gold bug right now, because let me make this a little bigger here. So if we look at the gold chart, I mean, not concerned because it's gone so far already. It's not that big of a deal, but we have what could be a rising wedge right here. And are we on? Let's go to regular. So, and get rid of all these. These are from when I was comparing it to Bitcoin, and that gold led during this period back in 2020. Bitcoin followed and caught up, of course, by a lot. Gold went up 40%, Bitcoin went up 600%. But this is a little bit of a rising wedge, and typically this is a reversal pattern. Okay, typically this will be some sort of reversal like that. Plus, if you just take these off, this just starts looking a little parabolic, does it not? I mean, not that it's going to crash, but it could come down. Like, what was this if we measure this out? So from August of 2020 down to the bottom in March of 2020, it was 20%. So, we could see a 20% dip here from some sort of blow off top. Where would that bring it down to? About 2100, some sort of dip like that. But this is starting to look parabolic. And yes, I mean, good for gold. I still hold some gold and silver, unfortunately. How about the Japanese yen? Actually up on the day, but you can see ever since this top. And again, I mean, if we want to get into it, I mean, this is a rising wedge as well. Okay. So it's not surprising to see this type of stuff turn into this type of dip, just like we saw on gold. Okay. US 10-year. Let's go to the daily. So I drew this orange line. When did I draw that? Last Friday, maybe? And it's kind of following it so far. Kind of expected some sort of turnaround here on the US 10-year, but brief. And then the real recession will resume. I was talking about this on Telegram prior that, okay, the idea, the concepts behind this are that, and let me go to this view. The concepts behind this are interest rates rise when there is expectation, especially the 10-year, okay, the expectation of growth and inflation. And in the system that we're in, blasphemy alert, we are in a deflationary. Now I just lost my damn train of thought. because the kids were slamming the door, and then it made me think of something different. What was I just saying? So we're going up, and the interest rate fallacy. Higher interest rates, it is loosening. If the economy is doing well, interest rates will rise. If people have a good expectation of the future, the interest rates will rise. So after the Fed cut here this week, what happened to rates? They started going up. Why? Because people are giving the Fed a chance. They're saying, okay, the Fed cut. They're saying we're still bullish. I mean, we're still solid on solid footing. They're just doing some sort of mid-cycle adjustment, keeping restraint at a good level. They think this is the right step. So they're giving the Fed the benefit of the doubt. So what will happen? Yields should rise. They're giving the Fed the benefit of the doubt. But then as we get maybe a month or two down the road, they'll say, oh crap, this was garbage the whole time. Yes, we're going into recession. Boom, yields fall again. Yields fall when growth and inflation expectations go down. They're the same thing, basically. So that's what I'm seeing for the US 10-year. We'll see how that turns out. Um, Oil, again, we talked about this on Telegram as well. Looks like they're coming up to some horizontal resistance. Sorry, the kids are slamming the doors. Horizontal resistance, and then there are some other things up here like the 50-day moving average for oil. So we'll see how that handles that. I would not be surprised. It's gone down to, just like Ethereum has gone down so much, oil has gone down so much as well. And a little correction, I would not be surprised with a little correction. But where we are in the global economy, in the grand scheme of things, the price of oil is going to go lower. All right, especially if Trump gets elected. Drill, baby, drill. What's going to happen to those futures? Actually, this might be a good proxy for what the polls are supposed to be telling us. So the price of oil will price in this political result. So we should be able to look at oil and say, look, the price of oil is going down. That must mean Trump is going to be elected because he's going to drill, baby, drill. And the market is pricing that in. If it looks like Kamala Harris is going to win, the price of oil will go up. But anyway, in the very near term, we could see a little bit of a correction going higher. But just like Ethereum, eventually the eventual price is lower. Oh my God, stand by. You guys get a front row seat to my family. Slamming the doors, making my interior door rock that I just put into my office. Okay, so where are we? S&P 500, all-time high yesterday. A little bit red on the day, but nothing out of the ordinary. We we'll see. We'll see if we test down here. I'm thinking we have plenty of time right now to continue higher. Okay. So that's where I would go on the S&P 500. This is the pre-recession trade, and I've talked about this for a long time too. 18 months, up to 2 years. I've been talking about bullish on stocks, bullish on bonds, and bullish on Bitcoin, bearish on oil because it's a pre-recession trade. We're going into recession. What should you expect? Lower growth and inflation expectations. But also, people are not they're not spending their money as much. What are they doing? They're tightening their belts. They're putting it into their 401ks. They're putting it into their retirement. Where does that go? Into the stock market. Safe havens are going to be bid. So bonds, bullion, and Bitcoin. And finally, with oil, as economic activity is slowing, there's going to be a lower demand for oil. So oil should fall. So that has been my pre-recession trade, and I've been hammering that for 18 months. Um, we still have time. We still have time to complete this, whatever complete would be, continue on the pre-recession trade until we have until we run into something in the market that we know, or we can say this is a possible time when this is over. But right now we don't have anything like that. uh, I mean, all time, we just broke all-time highs. It's very unlikely at this point that it's going to crash down. And if it does, okay, we can just say simple. We cross this line, we have to rethink this. We cross this line down here, now we're in big trouble. Okay. That's pretty simple. And we're nowhere near that. So it's not like we're going to have one bad day and the price goes from, comes down here. Oh my God, recession. It's over. You know what I mean? So just put some horizontals on there. Say, this is where we're going to reevaluate. But right now, it's a pre-recession trade is still in full effect. You could say there is some steepening to it. So maybe we're coming to an end, but that's still down the road. So that's what I am thinking about for the S&P 500. Drakery, laughing. BTCP. But Ansel, the Fed told us that growth and inflation will be 2 to 3% forever. Yes, the SEP, they're nice, smoothly declining curves where not a single voting member of the Fed had a dot plot or had a dot outside of consensus. I mean, the group think, see, I don't know. I mean, I understand that they vote, and this meeting actually did have one. What do you call that? Contrary vote or vote against the policy, and it was the first one for many, many years. They mostly are 100% in consensus when they vote, but there was one member that voted against the 50 basis point cut, probably in favor of a 25 basis point cut. But they're all in lockstep. All their dots are around the same thing. With all of their data that they have, they can't see a recession. They can't see the likelihood or even a risk. Even a risk. Not one sees even a risk of recession. It's outlandish. It's so outlandish, you can't believe it. So, anyway. Okay, so that's it for that. Let me check Telegram, see if there's anybody putting a comment over there. Let me check the regular chat. Sometimes people don't put stuff in there. No, nothing new. Okay. All right, guys. Well, let's go back to bitcoinandmarkets.com. Check it out. Subscribe to the email list. You get my free stuff. Put out at least, the Monday newsletter and one or two other free posts a week. So you get that if you're on the email list. And then I also put out my premium content over there on bitcoinandmarkets.com. Appreciate guys that signed up for that. Hope you get some value out of it. Also, follow me on Forbes. Follow me on Twitter and check out the Telegram, t.me/Bitcoin and markets. All right, that's going to do it, guys. Hope you have a great Friday. Get out there, touch some grass, hug somebody you love, spend time with people that really matter in your life, and hope you guys have a quality weekend. All right, see you later. Bye.